A 50-year mortgage loan option? Let me show you the numbers. We're going to use an example of a purchase price of $400,000 and a down payment of 5%. With the 30-year option and today's interest rates, which are around 6.3% for the 30-year loan, your mortgage payment comes out to approximately $2,860, including taxes and insurance. Your total interest paid is about $466,000. Now let's run this with a 50-year mortgage and look at the comparison. Please understand that the interest rate is likely going to be higher than the 30-year. I'm using 6.8% for this example, which is a 0.5% higher, but it could be even higher than that. Monthly mortgage comes out to $2,736, which is only $123 cheaper than the 30-year option. Now look at the interest, guys. $957,000. This is crazy. Now, I do understand that people don't typically stay in their homes for the full term of their loan. I think the biggest problem here is the slow buildup of equity. People are not going to be able to build that equity and pass on that generational wealth. Because if you think of how amortization schedules work, at the beginning of your loan, you're paying mostly interest, and at the end, you're paying mostly towards your principal. So if you're stretching that out to 50 years, imagine how long it's going to take for you to gain some traction in that equity. It could be 25, 30, 35 years before you have some real equity built up in your home. Bottom line is, I don't think the 50-year loan is a good option. I don't see it as a good deal. It's not a good trade. You're paying so much more interest and you're taking forever to build up that equity. But I'd love to see what you guys think. Please drop your comment down below, and thank you for watching.